Hello traders, and welcome back to the channel where we demystify the markets. Today, we're diving deep into a fascinating ticker that recently flashed on our scanners. But before we get started, please remember, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, with that out of the way, let's talk about a stock that's generating some serious buzz in the biotech sector, PCSA Pharmaceuticals Inc., or PCSA. Show chart PCSA ticker. PCSA Pharmaceuticals Inc., ticker symbol PCSA, is a clinical stage biopharmaceutical company operating in the high-stakes healthcare and biotechnology sector. With a market cap currently sitting at around $5.08 million, this stock firmly resides in penny stock territory, which often means high volatility and potential for significant moves. PCSA focuses on developing cancer therapy drugs, specifically modifying existing FDA-approved oncology drugs to improve their safety and efficacy. This strategy aims to reduce development risk and potentially speed up approval times. Looking at the recent price action, PCSA has seen quite a ride. Today alone, it's up a respectable plus 6.12%. Over the last 5 days, it's gained plus 11.83%, showing a nice short-term bounce. However, if we zoom out to the last 30 days, the picture changes slightly, with the stock down minus 20.31%. This tells us it's been under some selling pressure recently. It's also trading significantly below its 52-week high of $14.25, currently sitting a massive 85.4% below the peak. On the flip side, it's currently 18.2% above its 52-week low of $1.07,600, suggesting some recovery from its floor. Now, let's talk about volume, which is crucial for a stock like this. Today, PCSA has traded an impressive 178,050 shares. This is significantly higher than its 30-day average volume of just 66,148 shares. This means its relative volume today is a whopping 2.7 times above average, indicating a strong surge of interest and activity around this specific name. So, with all that context, why did PCSA pop up on our rigorous screening strategies? It triggered our Ituzogi strategy, which identifies a specific setup we call a bear trap reversal. What does that mean in plain English? Show chart Ituzogi strategy diagram. It means a stock that has been under significant selling pressure, just like PCSA's minus 20.31% drop over the last 30 days, is now showing signs of recovery. Specifically, it's climbing back above its EM advantage 20-period exponential moving average, and crucially, this recovery is happening with strong volume confirmation. That 2.7x relative volume we just discussed for PCSA? That's exactly the kind of confirmation we look for in this setup. The bears got trapped as the stock unexpectedly reversed higher. But we don't just rely on one signal. This Ituzogi signal was further confirmed by our robust VWAP and EMA alignment gate. In simple terms, this filter makes sure the stock's price isn't just bouncing randomly. It ensures the price is trading above its volume-weighted moving average, which factors in volume to give more weight to price points where more shares were traded. Highlight VWAP and EMA on chart. It also verifies that the trend strength measured by ADX is above 18, indicating a healthy, developing trend, and that the relative strength index, or RSI, is in a healthy momentum zone between 45 and 68. All these conditions have to be met simultaneously to confirm the signal, effectively eliminating many false breakouts and giving us high confidence. So, let's put it all together for PCSA. The Ituzogi strategy identified that recent downward pressure on PCSA Pharmaceuticals, pushing it down over 20% in the last month, might be overdone. To chart, recent price dip in recovery. The bounce we're seeing today, with its plus 6.12% gain, is significant because it's accompanied by incredibly high volume 178,050 shares, which is almost triple its average. This suggests institutional or significant retail interest is coming back into the stock, overpowering the sellers. The confirmation from the VWAP and EMA alignment gate, along with healthy ADX and RSI readings, tells us this isn't just a fleeting spike, but a potentially more robust reversal. For a small-cap biotech like PCSA, with its inherent volatility, such strong technical confirmation is absolutely vital. Now, let's talk about the specific levels our scanner highlighted for a potential trade setup. Do chart highlight entry, stop, and targets. The scanner entry signal price was $2.12. Our stop-loss level, which is critical for managing risk, especially with volatile stocks like PCSA, is set at $2.1094. This extremely tight stop-loss minimizes potential downside if the reversal doesn't hold. For potential profits, we have 3 take-profit targets. T-Pone, $2.2260. TP-OR, $2.3320. TP3, $2.4380. What's really compelling here is the risk/reward ratio. For this setup, it's an incredible 110.0. This means for every single dollar you might risk on this trade, the potential upside is $10. This is an exceptionally attractive ratio, indicating a high potential reward relative to a very limited risk, which is a key component of robust trading strategies. Before we continue, I want to reiterate our important disclaimer. Trading involves substantial risk, and it's crucial to understand that past performance is not indicative of future results. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Beyond these scanner-generated levels, what else should you keep an eye on with Processor Pharmaceuticals, Inc.? As a clinical stage biopharmaceutical company, PCSA is highly susceptible to news catalysts. Show news screen any updates on their cancer therapy drug trials, FDA progress, or research results could cause rapid and dramatic price swings. Given its penny stock status and low market cap, volatility will remain high. While the 52-week high of $14.25 shows its potential for exponential growth, it also reminds us of how quickly these stocks can pull back. Continuously monitor volume. We need to see if this elevated activity continues, confirming sustained interest. Watch for any fundamental news that could either support or contradict this technical setup. So there you have it, a deep dive into PCSA, Processor Pharmaceuticals, Inc., a small-cap biotech that's recently triggered a compelling bear trap reversal signal. With its recent selling pressure, strong recovery with 2.7x average volume, and robust confirmation from our VWAP and EMA alignment gate, PCSA presents a fascinating case study in identifying potential reversals. The attractive 110.0 risk/reward ratio highlights why these setups are so sought after. Remember, diligent research and risk management are paramount, especially in this exciting but volatile sector. If you found this breakdown helpful, please smash that like button, subscribe for more in-depth stock analysis, and let us know your thoughts or any questions about PCSA in the comments below. Happy trading, and we'll see you in the next video.